Hello everyone, welcome to today's live session. Today we are on the day 96 and we are diving into the topic that is crucial for anyone looking to invest into mutual fund. Key factors for mutual fund selection. If you have ever wondered how to pick the right mutual fund for your investment goals, you're in the right place. All right, let's break it down in simple terms. Mutual funds are a popular way to invest your money. They pull money from investors to invest into stocks, bonds, or other assets. But with so many options out there, how do you choose the right one? So, here are some key factors to consider. The first one, fund performance. First up, take a look at the fund's performance over the time. Look for funds that demonstrate consistent performance over various market conditions and time period. Consider the level of risk associated with the fund's performance. High returns may be accompanied by higher volatility or risk, so it's essential to evaluate risk adjusted returns. Compare the fund's performance with relevant benchmarks to assess its relative performance within the peer group or market segment. Examine the fund's historical performance over different time frames to evaluate its track record and performance consistency. The second factor to consider is expense ratio. Pay attention to the expense ratio. This is the annual fee charged by the fund to cover its operating expense. A lower expense ratio means more of your money goes towards your investment. Look for funds that offer good value for the fees you're paying. A low expense ratio doesn't guarantee high returns, but it can help you keep more of your investment earnings. Index funds typically have lower expense ratios compared to actively managed funds because they aim to replicate the performance of a specific market index. If you're looking to minimize cost, index funds can be a good option. Finally, make it a habit to review the expense ratios of your mutual funds regularly. If you find that a fund's expense ratio has increased significantly, it might be time to reconsider your investments. Third point to consider is fund manager's track record. Consider the track record of the fund manager. A strong track record demonstrates the fund manager's investment expertise and skill in navigating the market. It provides investors with confidence that their money is in capable hands. Consistency in performance is the key. A fund manager with a consistent track record of delivering positive returns over time indicate disciplined investment strategies and effective risk management. The fund manager's track record should align with your investment goals and risk tolerance. For example, if you are seeking steady growth, you will want to choose a fund manager who is known for delivering consistent, moderate return. A good track record also reflects a fund manager's ability to adapt to changing market conditions and adjust investment strategies accordingly. This adaptability, this adaptability is crucial for long-term success in investing. The fourth point to consider is risk profile. Before choosing a mutual fund, it's important to assess your own risk tolerance. Ask yourself, how comfortable are you with the possibility of fluctuations in the value of your investments? Are you willing to take on higher risk for the potential of higher returns? Or do you prefer low risk investments with more stable returns? Once you have evaluated your risk tolerance, you can then look for mutual funds that align with your risk profile. Mutual funds come in various risk profiles ranging from conservative, that is low risk, lower potential returns, to aggressive, higher risk and higher potential returns. Choose funds that match your risk tolerance and investment objectives. The fifth key point to consider is investment objectives. Pay attention to the investment objectives and strategies of mutual funds. Some funds may focus on growth and capital appreciation, while others may prioritize income generation and capital preservation. Choose funds whose objectives align with your own investment goals and risk tolerance. Now that you know the key factors, Here are some tips to help you select the right mutual fund. First one, diversify. Don't put all your eggs in one basket. Diversify your investments across different asset classes and sectors to spread out the risk. Second, do your research. Take the time to research different funds and understand their investment approach, fees, and historical returns. Third, consider your goals. Think about your investment goals, timeline, and risk tolerance. Choose funds that match your objectives. Next one, stay informed. Keep an eye on your investments and stay informed about market trends and economic developments that could impact your fund. So, choosing the right mutual fund is an important decision that can have a big impact on your financial future. By considering factors like fund performance, expense ratio, and the fund manager's track record, and following these tips, you can make informed decisions that align with your investment goals. Thanks for joining us today and happy investing. Feel free to drop any questions you have in the comments below. We are here to help you. Bye. Good night. See you tomorrow.